All right, let's get rolling here this morning. So I finally got my my buy and sell liquidity dots down. I've been working on this almost gosh, 7, almost 8 months now, and finally I got it all put together. Before with our algorithm, we had to match our liquidity grab zones up, see if there's confluence on the supply demand lines. Looking for that, basically those fair value gap levels to buy and sell. Well, I put it all together with a simple red dot and a green dot. So when the red dot comes up, we got a high probability trade. When a green dot comes up, we got a high probability trade. So I'll show you we'll walk through the system here. Gerald's wrapping this now for all traders. We'll get this out to all traders. But let's go through a little bit, and then I'll go into the market pre-prep. I'll show you where the highest amount of puts in the market are, the highest amount of calls. I've been really good at calling levels in the market for you guys. So I'll go over how we want to do that in a second also. But let's go over the algorithm first of all and what we want to do. So let's look at the structure on the setup right here real quick, and then we'll get to we'll dive into this thing. So what we have is we have as far as the this dot-based system, this dot's going to come up. There's going to be a red dot or a green dot. So let's break it down into layman's terms. This dot's not going to fire unless all my parameters are met. So if you've been in the trading room with me in the past, I'm a big fan of buying and selling liquidity on pullbacks, buying and selling retracements with confluence levels. We've always done that ever since we opened the trading room. Well, the difficulty being the market moves so fast in the futures market is that a lot of traders can't, look at everything, digest everything so quickly with lining up. If it's in the buy zone, sell zone, is it lining up on my symmetry dots? Is it, is there total alignment? Well, I alleviated the problem by showing a red dot on a buy and a sell dot on a buy dot, green dot to buy, and a red dot to sell when all those ingredients come together. So it's still the same methodology. I just simplified it. I'm going to show you two trades, two patterns that work on this. One is a momentum trade, this is on the 1 minute chart. We had a huge trade here a couple of days ago on it also that tanked the market. And then there's a retracement trade, which is going to show you how when it comes back up to this 50-day moving average, you want to see a dot that fires. We had some big trades yesterday on that also. So let me go through the two setups. First of all, now that you know why those dots fire, basically, if you look at all my videos in the past on our website, with all that, all those pullbacks when looking for liquidity buys and sells, it's basically wrapped up into a dot now. Okay. So that being said, I made it pretty simple because we don't have to clog our chart with tons of indicators now. We have to see liquidity grad zones. We don't have to see the symmetry dots. We don't have to see the supply and demand lines because everything's built into the dot. So that being said, I just put simple moving averages on here. There's no magical moving averages. It's just a simple, 20. I got a 20 here, a 50, a 100, and a 200. Very simple. You can use exponential or simple. It doesn't matter. Those that trade off moving averages, they're lagging. They're worthless by nature, but they're great for trend direction. So they're really good. They're useful for visualizing when a qualified dot's going to come up. So basically, if you're looking for on the 1 minute chart here for a sell, because the 1 minute produces some nice runs. We had a real big one a couple days ago. I'll show you in a second. But when that red dot fires, you don't want to be in the middle of these moving averages, and you don't want to be away from these moving averages. So I don't want to see a confluence dot fire down here. I want to be resting right up against my 20-day moving average, but I want to be below all moving averages on the 1 minute. Because hey Thomas, good morning. I want to see weakness in the market. So that's one. Two, because we know that everything's built into the sell dot already to make it easier for traders to execute trades and to see when confluence is. So what we want to do then is we want to qualify what direction we're going. So I don't want to look at dots way away from the 20, and I don't want to look dots in between all these MAs because you don't have any momentum Remember, I have two trades. I have a momentum trade and a retracement trade with these dots. This is a momentum trade that happened this morning. Secondly, if it's below all these MAs, I want to be my relative strength in the market. This is a workspace we have set up for you guys. Or if you view the trading room, you can come in and view the trading room. I run these charts 23 out of 24 hours a day. Sunday night at 6 p.m. all the way to Friday night at 5 p.m. It's only closed at 5 p.m. Eastern to 6 p.m. because the market's closed on the futures market. Other than that, it runs 24 hours. This works in the Asian market. After 6 p.m., we had some big trades this week in the Asian market. It works on the London Open at 3 a.m. in the morning. And then also it works at the New York session. I like to see a lot of these trades. I like this 1 minute chart firing some trades off between that 9:30 to that power hour of 10:30. So that being said, so two characteristics when you trade these dots, I got everything lined up for you inside the dot, right? So we don't have to worry about that anymore. Really, you just want to qualify it. Am I in the red? Is my oscillator in the red? Yes. Relative strength is weak, short. Am I below all the moving averages? Yes. Relative strength is weak. Make sure you buy. So if you ever happen to see a green dot that pops up, which they rarely do because I have it programmed to do this with trend, but if they rarely pop up and you see a green dot below moving averages, ignore it. If you see a green dot pop below and the relative strength of the market's red, ignore it. It's that simple. So I made it really simple for, sort of a plug and play. It works great on the NASDAQ futures, the crude oil, gold, whatever you trade, Russell 2000, same methodology. So if I'm trading the 1 minute, that's the one characteristic I like. I like being close to that 20. I like being below all moving averages. I don't like taking dots away from that. Okay. The big one we had the other day in the morning, where was it? Guy right here. You can see the same characteristic. We had a big short a couple of days ago, right at 9:40. Ever since I opened the trading room, I always preach about time of day trading. 9:40 is a great time. It's 10 minutes after the New York Open. That window from like 9:35 to 9:50, I'm looking for a sell down on the 1 minute. We got one. These don't repaint either. If they're losers, meaning if they go above the higher price, they do not repaint. The dot stays on there if you want to back test. So you guys can do that if you want to. I can't stand indicators that repaint. So I make sure there's dots. You can go back and back test any size you want, bar chart. And that goes another thing. You don't have to use the time frames or the Rinko sizes that I educate with. You can use a 5-minute chart. You can use a 1 minute chart, 15-minute chart, 30-minute chart, 2-hour chart. You can use any type of Rinko chart. You can use your own bar type. If you have a bar type that's outside of NinjaTrader that you programmed, you can use any bar type. We have a proprietary bar type you can use on ours, a Sim Rinko if you want to. This is a standard 1 minute. But you notice a couple things. It's hugging the 20. It's not away from the 20 when the dot fires, and relative strength is weak. Same thing that happened today on today's trading dot. So that just happened a couple of days ago. That's a 9:40 time of day trade, confluent short. They don't repaint, nice short. All right, same thing happened here this morning on that trade. So that's the 1 minute chart. I've been sitting down here, guys, sitting down here in the bottom left. So that's the 1 minute. So what are these charts above? These are just simple relative strength charts. I like looking at the big picture on the chart and see what the macro point of view is. If my oscillator's in the red on the 60-minute chart, the upper left-hand corner is the 60-minute, and I got moving averages, the market's weak. Just take sell dots. You want to short. If the market's in the blue, you want to look for buy dots. It's just very simple. It's just a macro point of view. I got a 30-minute, 60-minute right beside each other. Nothing magical about that. If they're both in the red, all three in the red, you got major trend alignment. The market's in a downtrend. Okay, so very, very simple. If we go to our main chart, this is a smaller Rinko chart, and this is a NinjaTrader has what's called a Uni Rinko chart. You can download it for free on NinjaTrader. This is a 1513. The tick reversal is very important. Now I have a 1513 here, but on the bottom right I have a 1535, and I want to show you the difference. The difference is you're not going to get a lot of setups over here on the 1535, but you're looking for bigger pushes. There's not a lot of noise. right? But your stop's going to increase, you know, your initial, because it's a larger tick reversal. It's a 35 instead of 13. So our standard chart's a 13 because our 13 chart still produces some nice trades. If you look at this 13 short, this short here, I'm below all three moving averages. So that's a short side setup. Below all three moving averages. And we got cranked. What was a short is a low of the candle? Was 74.5 plus or minus a few ticks. And the swing low was what? 56. So just because you're using a small Renko size, guys, it doesn't mean that you're not going to get a nice little run in the market. Which brings me to another point. You need to set up an ATM on NinjaTrader. So the ATM, you should set up ATM and use the automated trail. This is a 1513. That means your stop's going to be whatever that reversal is. My stop is 2 ticks above that reversal. So it's a 15 tick stop on this. You can do the micros as 1/10 of the big contract until you get used to trading these dots and so on. The micros 1/10 loss, 1/10 gain. It works the same thing. The micros give you the same signals as the big contract. But that being said, is that what we want to do is, if you enter this trade here, if you had your ATM set up to trail, you know, the wheelhouse is between, with this system, is 8 to 12 ticks should be your first target. So let's say you're doing a 15 tick stop, 8 to 12 ticks should be your first target, depending how you want to do it. 8 to 12 ticks. Let's say you want to go 8 ticks is your first target. Then you can go break even +1, and then you let your automated ATM work for you and crank. The video tomorrow, I'll go tomorrow and show you how to set that up, and I'll record it on on our video. I'll show you how to set up an automated ATM. So all you do is press the button when the dot fires, when it qualifies, below moving averages, below the red, you're hugging the white, you're good, you know, and then it'll have your hard stop in. And we don't adjust stops. If it's going to stop out, stop us out, right? Because where you're going to be profitable on a system like this is catching these runners, you know, because these runners are not small. This is not a small trade for a Renko chart. 73 down to 56 potential. That's a nice trade. So what you want to try to do, you see there's no really wicks in this. So you would have kept in that trade probably to right around there on your automated trail, right around 64 3/4. And you were short around 73. That's a 10-point trade, right? So your reward to risk on that with a 15 tick stop, and it was a 10-point potential trade on an automated trail. 10 times 4 ticks is 40 ticks. You know, you're looking about a 3-to-1 reward to risk ratio. You're just under 3-to-1, you know, 2.5 reward to risk ratio, which is good. That's what we need. So set up an automated trail with those, and after your first target's breaking +1, let NinjaTrader do the work for you. Just don't try to scalp these things. Now, if you want to, you can. I mean, it's totally up to you guys. It's your own funds on how to do this, but you can go to any Renko size you want. This is what I educate with, 1513 for smaller stops. Okay, so you get signals like this. The larger chart, here's a trade since midnight. All right, so I love these momentum dots. Momentum dots on a larger Renko size, I absolutely love. Why? There's 2 ways I look at the larger chart. There's 2 ways I like taking dots. This is a larger Renko size, 1535. So that's a big tick reversal, right? So obviously your reward to risk is going to be absolutely terrible if you do a 35 tick stop and start going for 8 ticks. I mean, you have to make, you know, 5 trades just to break even on 1 loss. 5 winners to 1 loss takes it all out. So obviously you don't want to do that. So what you can use this for is, though, you can use it for directional momentum. So if you look, I love these. There's 2 ways I like to look at this chart. You know, I like to look at it when the green dots fire and you get some nice momentum. So the green dot fired here at right before the London Open this morning at 70 1/4, and it ran straight up. Before the first big liquidity grab, it ran to 80. So you had 10 points on the books, and these are small dips. These wicks are small liquidity grabs. So your ATM would have held you in on that. You know, the second way I like doing the dots is this. After a big transition on a retest, this is a retest of the VWAP. So or near the VWAP, I'm sorry. And so this is the retest of the 200-day moving average. This is the 50 in the blue, 200-day on the green. The rotor strength is up. And here's another way the dots work really good is these rejection. It's a zero line rejection, which is not zero, it's 50, but I call it zero line rejection. Oscillator comes down, touch 200. You see that big bounce, but that's a good entry right there for me at 78. This would have held you in the ATM. You would have ran probably right around to around 84 before your ATM would have stopped you out on a tight trail. But that's one way I like to do it on retest. The other way I like to do it on this larger Renko size is after a big liquidity grab. So wicks are stop outs for amateur traders. This is where the professional monies take money from amateurs, are these big wicks. If I see a big wick and then I get a dot that fires right after a big wick, I immediately want to get in that market because it tells me they grab liquidity, they're going to drive it up. So this is another good way I like using a large chart. I'll keep it in the room on the bottom right for you guys. You guys can trade any chart really you want to with these dots because all the ingredients are built into the dots already. The sell we had this morning was 816. The 18 would have held you in on this little guy. 67 a quarter, and it just, you can see it got smacked down to around 55. So that's a larger Renko down here. You trade a little bit differently than the smaller because I want to wait till a big wick happens and then the dot fires, because you don't want to get into a trade over here and see it get a big retracement on you. So I'll leave that up, for you guys. 1 minute, I just showed you how to trade. Let's go over this chart real quick as far as the 1-5-13 Uni Renko. There's a retracement trade I like. So I told you the momentum trade. This is a momentum trade, right? The dots fire. Rotor strength is below the red, and we're below all moving averages. Very simple, easy, right? The second trade says two trades. I have a retracement trade with the dots. Love this trade. I'm going to show you. You start doing these, you're going to start really seeing some nice movement in the market. Retracement trade, and then I got a momentum trade. So momentum trade on the 1 minute or this time frame, any time frame, you want to make sure that you are below all moving averages, especially on the 1 minute. You want to be tight to the 20, not away from it, because we don't want a mean reversion to happen on you. Mean reversion, if you get way away from VWAP, it likes to come right back up to VWAP. That's our VWAP line. Right now, we're negative. We're bearish. That's our VWAP line. We're bearish. We're looking for sell-off. So, but make sure you momentum. So that's momentum trade. So momentum, the characteristic, below all moving averages. Rotor strength's got to be in the red if you're selling. Okay? Very, very simple. All right? On the retracement trade, I'm going to show you 2 ways how to trade this thing. A retracement trade. I absolutely love when this happens. Now, it didn't fire here, but if I saw a dot come right here, I would short this without even thinking about it. Why? Because if I come up and I'm red Renko, and I get up and I touch my 50-day moving average and then the dot fires, that is my retracement trade setup. I want to take that market short. Consequently, if I get one of these sell boxes come up, red sell boxes, and these are my liquidity grab boxes, if I come down like this, ABC short, and I come back up to it, and I get a red dot that fires above it, it happened twice yesterday for some big moves. It happened the day before for some big moves. It can flute inside of my liquidity grab box. If you don't have to trade these liquidity grab boxes at all until you get a red dot inside of them, or momentum, or retracement to the 50. That's the 3 ways I look at it, and I don't look at it any other way. So you got a retracement trade, which comes to the 50, see the dot, or inside of my box. Those are the 2 retracement trades I like, or strictly momentum. All right. So with momentum, like I said, have your ATM set up at 8 ticks in your first target, with your first target, and then see if you can, scale contracts and see if you can let that run. All right. So that's really the only way I like trading the system. Now, if you look, let's go through yesterday's trades in. Why we're looking for trades here this morning. We just had one a second ago. Let's just go through them real quick. Just so you understand what I'm talking about here. Let's use a smaller Rinko. Where's 930? 930, 930, where you at? All right, 940 time day trade. Okay, so that's what I'm talking about. So when you see momentum trades that come in, momentum trades. So momentum trades are this. Momentum trades are this is what's called a retracement trade in my liquidity red box. This is a sell. All right. Box comes up. It's an ABC pattern. It's very simple. It's with trend. I'm below all moving averages. A simple ABC. ABC short, or us old school traders call it a 1, 2, 3 pattern. So the price comes down. I did several videos on this. Gets inside my liquidity grab box. It's right at VWAP. That's fair value. If you know anything about institutional trading, this is where they like to fill. Their average fill should be around the VWAP. Traders, if they're trying to buy, let's say 100,000 shares of Google, Meta, whatever, they're trying to get their average fill around that VWAP, because once you get away from the VWAP, price becomes, this is at a discount. Price becomes expensive. They get way above the VWAP. They won't buy. They'll wait till it comes down to the mean around the VWAP. We trade the VWAP one way. If we're below it, we're looking for a bearish setup. Above it, looking for a bullish setup. Very simple. It's not hard to understand. So there's the ABC pattern. That's one of my trades that I love to see. But so if you get a dot that fires inside an ABC pattern, that is a retracement trade. Beautiful trade setup. Okay. The second retracement trade that happens a lot with this system, and I cherry pick these dots, is this. You'll come up and you'll touch my 50, or you'll exceed my 50. And then you get a red reversal candle, and the dot will fire right above for a short. This happened about 3 or 4 times yesterday for some nice moves on this chart. So if that happens, you want to short that market because the relative strength is weak. That's a retracement trade. So 2 retracement trades I have. I have inside of my box. Preferably, the dot will fire. That's the best one you're going to get. And it's near VWAP. I love that because VWAP, it's like, that's fair value. When you're the standard deviation 1 and VWAP, that's fair value. And we're not away from it. The farther you get away from VWAP, you could get a mean reversion back up to VWAP. So we want to try to get trades at this right after the open here this morning at 9:30. I love trades right around VWAP. Anyway, so that being said, so that's my only 2 retracement trades. I look for the dots is retracement up into the liquidity grab box, dot fires. Or if you don't have liquidity grab box and you come up and you're touching my 50-day moving average. Because what's happening is the smart money, they're doing this. They're pulling the market back up. They're counter trend trading the market back up. Grabbing liquidity. My dot will fire and they'll drill it. Okay. And these, like I said, even on a small Rinko chart like this, and you can use any bar chart you want because these dots work on any time frame. But 1-5-13, that's a small Rinko. And it's still, we've seen yesterday, we saw some nice runs, 10, 15, 20-point runs on the S&P. So when you see that, that is an extra retracement trade. Momentum trades are very simple right here. Below all moving averages, and the relative strength is weak. All right, that's only. So I have 2 retracement trades with the dots, and then you have a retracement trade here or inside the box. That's it. That's the only 3 patterns you need to understand with the system because everything's built into the dots now. I made it very, very simple. So when we come and we look at these trades, so when you see a trade, this one I'm talking about a retracement trade. You see how it comes down to the 50-day moving average, and then the dot fires afterwards. You see how the relative strength was in blue. Now this was below our VWAP at the time, so this is a counter trend trade, but it shows you what I'm looking for in ingredients. I want the relative strength to be in blue, and I want to test that 50 on a retracement, and then I want to see a green dot fire right afterwards, and that's 32 up to 39. That was a 7-point S&P play, but you could see I'm still going by the rules. on my retracement rules. Came down to 50, tested it. So that's a retracement long, right? Retracement long. This is strictly a momentum setup because I'm below all three moving averages. Got a nice spread. Relative strength is weak. Retracement setup, right? So this is where I would look for a what? I would look for a dot to fire here. It's testing my 50. I'm getting in the relative strength positive, but no dot fired. I would look for a dot here, testing the 50. You see what I look to do here, test the 50. Again, this is a counter trend trade. We're below the VWAP. But my point is you can see what I'm looking for. You want to get the ones with trend direction, which we have a big one coming up here with trend direction in a second. But you see what I'm looking for. I'm looking for that dip retracement right down to the 50, positive, relative strength, dot fires here. So those are with momentum, overall momentum. So we're going to get into, hold on 1 second. I want to show you an example here. All right. So yesterday, right here. So what happens? Let's go when you cross over major support and resistance. So when these dots at fire, if they're crossing, I'm going to show you where my positive gamma is or negative gamma. We're going to go to that in a second. But when these dots fire, it broke major resistance. I had a line up here called gamma. It closed above gamma, then I got a green dot. I'm going to show you when I put these lines up like today on the highest put wall, highest call wall, and the gamma flip. If I get a dot that fires right when it crosses over, I am taking that trade because you're going to have a lot of possible short covering coming in that market. Now, this set up pretty good the way it was because we were above VWAP, number one. But here's an ABC long. Remember, that's my retracement trade. Came inside my green box, reversal. If I get an ABC long and my dot fires right after, this thing had a couple good things going for it. It had my ABC that qualified, right? Right here. A, B, C. There's our long. A, B, C. Reversal candle. There's your long. If it closes inside my box, reverses inside my box, and doesn't close outside my box and get a green dot, look for that market to go parabolic. And it did. We had a huge trade yesterday, 57, straight up to 77, 20 S&P points in a matter of 15 minutes. So watch for that when it's breaking my major levels, which I'll go over that in a second. That is a trade I like to do. 1 second here. I want to show you another one. When these come up. Oh, that was a close. Okay. So, where was it last night? All right. So here, again, if I got these lines I put up for you, if you see two things, if you see my boxes that come up, because I'm looking at the inside of the options market when I put these up. I want to show you the highest put activity, highest call activity daily, and the gamma flip, positive or negative gamma. And I'm going to go over how we want to trade those in a second. But if I get a liquidity grab box that happens right on top of that, or if I get a dot that fires, that is a screaming buy. And it shot straight out of there yesterday off that key level. Okay? So let's get into momentum versus taking momentum. This is the Asian market, but this is a momentum versus a retracement trade. So if you want to just wait for liquidity grabs, you're going to have to wait for retracement to come towards a 50, and then you got to wait for a dot. They're going to come up during the day. Here, see how it retraces, and then this is a high probability trade, short at 85.5, went down to 69. You want to have your automated ATM crank you down. Huge possible potential in that one. So if the more conservative trade you would have is a retracement to the 50 and a let a dot fire, right? The momentum trades are these. It's a strict momentum play. If I'm going to take a momentum play, what I like to see, I'd like to see a little wick because I know they grab some liquidity before the big push. At least I'm not getting a dot that fires over a plain bar. At least I got a big wick and then it closes back red, dot fires. That's telling me at least they grab liquidity. They're going to try to drill it. And then the relative strength is weak. So that's a big difference, is it between a retracement trade here This is a retracement trade dot. You can cherry pick those. And if you take a momentum trade, that's easy. We had a momentum trade here this morning on the 1 minute and a momentum trade off the 5-1-5-13.